I think a lot of the distressed ATO stuff in particular is coming from off the back of COVID. I mean, I'd be getting 5-6 calls a week with people saying, hey, I've got something that's come through that I was not expecting at all. It's from years ago and they've just picked it up now and basically saying, hey, everything that we told you don't worry about 4 years ago, it's all due in 21 days. I think that people are now moving to a space where they'd rather work with flexible lenders that give them better terms. It's not just about the interest rate, it's about the longer term process that you're going through. What's the strategy that you're following? And I think as time goes on, people are realizing more and more that they can use the equity in their property far more effectively and with actually less risk to their personal assets than using traditional business type financing.
Bailey here from O'Brien Palmer. In response to some of the videos we've been producing lately, we've had a lot of requests for information about how finance can perform part of a restructuring strategy. Welcome guys, thanks for coming along. Why don't you tell everybody who you are and where you're from?
Thanks very much. I'm William Banham. I'm the Managing Director and Co-Founder of Front Financial. We are a mortgage brokerage and non-bank lender based in Neutral Bay in Sydney.
I'm Angus Fraser. I'm a lending partner at Front Financial. I've been with the company since day one and we're hungry to keep growing.
We wanted to set the business up to support mainly people that are in not your typical situations for finance, that need sort of alternative lenders or need longer term solutions to, let's say, a restructuring or some sort of financial difficulty or hardship that you might be facing. Within the sort of lending realm, there's banks, non-banks, and the private market. Our business encompasses the full spectrum. We also do a bit of lending ourselves, specifically when people are in really bad situations with creditors that are getting upset and they need a quick outcome. That's where we really are helpful.
Absolutely. We've seen the ATO take a more aggressive approach to debt enforcement over the last 12 months. And that's certainly driving people into the arms of the insolvency industry as they look for proper solutions to the problems that they're facing. What would you say to people who suggested that distressed finance is Raptor style lending or predatory lending practices?
Look, I mean, obviously there is people out there, like in every industry, unfortunately, there's a bit of a stain from people that are not acting in ways which are good. Hence why when we've picked up the slack, we're having a lot of success because we're doing things correctly, we're doing things right, and we're doing things with the intention of helping people long term as opposed to just short term, like what you've just mentioned there, where they're not thinking about their customer's journey. With our broking experience, I think that's really fed into actually looking at a longer term view. So you might have certain people where if you have a really bad situation, you do need some short term finance. It's far more expensive than what you would get at a bank. But if you look at it over a year, if you're only using that for say a period of 45 days while you prepare your application to go back to a second tier or a sub-major bank or something like that, I think that's where having an experienced finance brokerage or an experienced finance partner can really help you explore all of the options.
We have seen in the matters that we've been appointed to at O'Brien Palmer, particularly recently in relation to small business restructures, that advisors are coming to the table to appoint us in circumstances where there is finance on the table as part of the proposals that directors are looking to put to their creditors. Have you had a role in helping directors as part of the small business restructuring process?
Yeah, a massive part of our business is dealing with people in that sort of situation. So obviously when you get an actual SBR and it's appointed, the company's going to show up on people's credit files as under administration, and it's going to actually show up. When you take that to most lenders or you take that to any bank, it immediately raises red flags. So what we've done and what we've found really helpful is in those situations, let's say we have someone that's got creditors that are, saying that we're going to appoint someone over a company or we're going to come and we're actually wanting to recover some sort of asset, we will jump in there and we can have the option of either brokering the deal somewhere or we can actually lend the money very short term, get the creditors paid out and give sort of a bridging finance, clear the runway, so to speak, for a period of time while we can prepare everything that needs to be submitted to a bank and then actually refinance and head back into that direction. So a lot of our experience comes from saying, if you go into an SBR, you always need to come back to said ATO with a proposal or an amount that you need to, even if you get, say, 75 cents in the dollar, you're still going to need to come back with that 25 cents. A lot of people that are in these situations don't have that in liquid cash. It's in equity in their home or in other assets, or, they've got invoices that are due, whatever it might be. We will look at the overall picture. We understand that the company is in administration, but we also understand that it's in administration for a reason, and that reason is so that the SBR can take place, which is going to put the company in a much better position. We've got the appetite to do it because we understand, from our experience in broking, that if we can actually get these people the money, get the creditors paid out, most of the time they fully intend to actually continue to trade their business. In fact, if they're not, I don't think they'd even be looking at doing an SBR to begin with, right?
Absolutely. It's undeniable that creditors can see significant value in a restructure that provides a return to them straight away, as opposed to having to wait 12 or 24 months for the return. So obtaining finance to be able to fund that structure of a workout is obviously very valuable and makes them very attractive proposals. What are the sort of costs and rates associated with being able to obtain finance to fund a small business restructure for an upfront return to creditors?
Yeah, it's a great question. It's going to depend on the timeline. Pretty much when it comes to lending, urgency is everything. If it needs to be done in 24 hours, it's going to be far more expensive. So I think firstly getting an idea of how long we have before we need to actually make some sort of payment is going to be important. In any instance where it's possible, we're always trying to work with a non-bank or a private lender that's going to be a shorter term facility so that we can exit it and get back to a second tier or a major lender. Let's say as of today, the 6th of May 2025, you might pay 6% on a home loan at 80% borrowing or something like that with a major bank, maybe a bit more, a bit less. Most people automatically assume the minute that you step out of that realm, you're going to be paying far more. So you'd be paying in the 12s, 13%, which is usually not the case. Most of the time, if you're talking about like a residential house, vacant land, even certain farms, we're seeing workshops, anything like that, that's commercial assets. Rather than going straight to a private lender, we can a lot of the time actually make the deal work with a non-bank lender. So that's going to be not nearly as expensive as a private and just more expensive than a bank, right here in the middle. So a bank, you might pay 6%, on a residential house at 80%. Generally speaking, if you do interest-only repayments, you're going to be looking at about 7% with a non-bank lender, providing that it's a residential asset. Private lending, you're going to be looking anywhere from 9 to 12%. But remember, that's over a year. So let's say that you're doing a 9 to 12% loan, that would only be for 3 months. You're not paying the full differential in the interest rate for the entire year. So it's all about a process.
Those figures are really different to the perception that's out there in the marketplace.
Totally.
That you're talking about 2 and 3% per month for this type of lending. So this is a great opportunity for people to understand that the market's moved a lot in recent years. I think that that's probably a function of competition, and it's also a function of the understanding that people like yourself bring to the table by understanding the circumstances of businesses and a broader strategy towards their workout solutions.
Yep.
Angus, you're at the front face of the business dealing with people. Who are the typical type people who are coming to speak to you to obtain finance?
Definitely. I said most of the people we work with who are going through an SBR are typically mum and dad small businesses, solo one-man band operators. Those types of people and businesses that operate often will fall into the SBR category, usually due to a multitude of years leading up of unorganisation on the tax side of things. I think is what you'd see as well. Typically working with these people, the main thing is getting on top of it as early as possible, I'd say. The longer you wait, the more expensive it's going to get, just tacking on the back of what William was saying. The closer to the deadline, the less your options are going to be. The earlier we can start, the closer we can get down to where those bank rates sit and the actual affordability and ease of getting into a new facility and moving on through the SBR to continue trading.
So there's a lot of information here that sort of addresses some of the preconceived notions that people have. Maybe you could tell us a couple of examples of people that you've been able to help out by providing finance in distressed circumstances.
I think the easiest one in that case is just going to be the most recent one that we settled this week. Just out of respect for privacy, I'll just loosely refer. The gentleman's name's John. I'll leave it at that. I mean, that's pretty broad. He sells camper vans, brand new and second-hand, cars and sort of light machinery. He's got a factory which he rents. He's also got a home that he owned in his individual name. Now, he had taken out business finance with a very prolific business loan lender who I will not mention just in case. They're very, very popular and they are very, very expensive and they don't muck around when it comes to defaults. There's no mercy. It's commercial lending, it's business lending, it's unregulated. There's no credit protection or anything. He has a house that was worth $420K that we got from a very, very conservative value that we use, which we rely on. He had $220,000 owing to the business loan lender, including their default fees, default admin fees and everything that they had tacked on. He had gotten that from years ago from some other broker and had just lost track of it and it spiraled sort of a bit out of control. He also had about $30,000 worth of purchase orders that he needs to fulfill to be able to make a living, that he has no cash to be able to fulfill because he's been making payments to this lender wherever possible. And then he had about $15,000 of ATO stuff that he knows in the back of his mind he owes. It's not, it hasn't been requested yet, but he knows it's going to be coming up soon. He doesn't want to start falling behind on that. Because of the urgency of the situation, I actually personally jumped on the phone straight away to the business lender. I let them know that we're in control of it. They're very familiar with us, and because of the work that we do in the industry, in the space, we're starting to build that sort of name that when we're dealing with it, we're across it and it's going to get done. I explained the timeline. I said, realistically, I'm going to need 7 days to be able to do this. Give me a payout letter for the end of the 7 days. I got the 7-day payout letter, which was higher than what the customer wanted, but quite frankly, that's what he had agreed to. Unfortunately, had he come to us initially, it would have been a lot cheaper for him, but that's what he had agreed 2 years ago. We got the payout letter. I knew that this guy could easily get this loan settled with a non-bank lender. So that's as in, it's actually, you tell the lender it's for business purposes, but the loan's in your own name. There's consumer credit protection. It's not a sort of, you're not actually a private lender. You're much less exposed in these sort of instances. It's got a full offset account, 100% offset and redraw, online banking. Interest is paid monthly in arrears as opposed to in advance, which is always helpful. But I know that that's going to take about 4 to 5 weeks for me to be able to do that. So what we did instead is we actually, as in us as the lender of record, lent him the capital to pay out the urgent needs that he had, which was the 230 odd thousand for the unnamed business lender. Once we had paid them out, now we've got runway and we've got time, and with us actually being the lender, we're fully in control of the process of getting him from where he is now into the next facility, and I know that he's not going to be exposed to somebody that's like what you mentioned before, sharky or predatory. We're in control of it. We're going to see him through from the beginning right through to the end. I don't think any other firms in the market that are willing and able to do that, where they can actually broker the loan to a lender, but in the interim between, to make sure that there's not going to be any issues, to make sure that we don't get further defaults or an appointment over the company or anything like that. Quite simply, we got in there, paid out the really urgent stuff and gave him the working capital that he needed to fulfill his purchase orders. And then now we've filed and have got a formal approval for the refinance out back to a non-bank lender. So the exercise was far, far less expensive for him doing it that way, as opposed to just going to a normal private lender. We will help the customer through this initial part and get him onto the next part with full intentions of working with him for the whole time through his next 30-year loan term. And the reason that we're able to do that is because of our intimate understanding as brokers where the risks lie, which is, I understood his ability to repay and service. I had no concerns about that. So we were happy to take a little bit more risk to help the guy out. And as you can probably imagine, he's pretty happy about that.
Yeah, I can imagine that he is. Can you give us another example, perhaps where you've actually worked with insolvency practitioners, whether it be a small business restructuring practitioner or a liquidator, to affect solutions with finance?
I had an introduction from another firm in Sydney where the gentleman was wanting to enter into an SBR. In summary, he'd had a bookkeeper that hadn't been doing the books properly for I think 6 or 7 years, and then bang, they've sprung this huge tax bill on him, and he had a DPN issued against him, giving him 21 days to basically come up with 600 grand. Now the SBR practitioner had said, that's fine, we're going to go in and do the negotiation. They had started that process, and again we needed to come up with the additional capital to be able to settle and meet the requirements that we had. Now the gentleman in question, it was a car work repair shop. We effectively went in there, we looked at all the options first of all, got all the information and documents. From the beginning, I knew straight away, again, this doesn't need to go to a private lender. It's already at a really high LVR. He's already at 75 or something like that. Property's worth about 1.5 mil, and he needed something like 110 to pay out. So you're looking now, private lending, you can go up to 75% on the absolute max, and it's more expensive. Again, this time we had a little bit longer. We had the full 21 days to get it sorted. So we thought, okay, instead of doing private lending this time, what we'll do is we will just broker this loan to an actual non-bank lender. Did the valuation straight away, helped him out by paying for the val, and he reimbursed me after settlement because again we had that real customer relationship where we were happy to support him and help him through a time that was stressful. Got the valuation report, immediately lodged it to a non-bank lender who we do a huge amount of business with and is happy with these sort of customers, particularly when they come off the back of an introduction from us. And sure enough, we got him to 85% low doc, which is just an accountant certification. And then we basically went through and said, look, this is where we can go. We got it lodged, settled, sorted, time, paid out, done and dusted, all within the thing. SBR's completed and is now The factory is fully operational again. He's got customers in the door, and with him, his loan's at 85%. So as soon as he's got some cash and he wants to reduce his loan below 80, we can then go back to that same lender without even needing to refinance or incur another dollar of cost and say, hey guys, we've got more equity now, we want to reduce our rate. So
I guess on the other side of the coin from what Will's stories were more about, we can also catch people earlier in the process. I worked with a lady in the past couple of weeks to try and help restructure everything before there was ever a formal idea of restructuring to come about. She was running her small business. It's a restaurant down in South Australia, and she had, I think it was 8 or 9 different business loans to 8 or 9 different business loan lenders, totaling somewhere around $8,500 a month in outgoings that she was paying month on end and never stopping. We got in touch with her through her accountant, who saw that there was a bit of a hole there and that her cash flow just wasn't where it needed to be. Now, if this was going to continue to go on for the life of those loans over the 2-3 years they were going to be there was a high chance that she wouldn't be able to stay on top of them for much longer based on where her business was currently sitting. We were able to look at what she had in her own name, being an investment property that she'd had for a matter of 10-12 years at this point. Obviously, due to the Australian property market, 10-12 years, you've got about this much equity here instead of this. We're able to tap into that and draw on that equity with a non-bank lender who was accepting it for business use at a rate of 7% interest only per annum, and pay out all those lenders and bring that $8,500 a month down to $1,000 a month, or just about. So the earlier you can catch on, the more flexible it will be, the cheaper it will be, the quicker you can get it done, and more than likely, the easier it will be to trade onwards and afterwards.
Fantastic. Now, a lot of people in this situation that are coming to speak to us about small business restructures might find themselves where they're not in a position where they have equity in their home, or perhaps aren't holding on to assets they can use as security. Are there solutions available for people to obtain finance in circumstances where they don't have that sort of leverage to bring to the table?
There's always options, but it's about deciding whether that option is actually right for you. Just because you can take a loan and pay out one debt doesn't necessarily mean that you should. Our role is to assess every situation, look at banks, non-banks, the private market, look at what we could potentially offer the customer to help through. Assets always help, but people forget, I can give another example. We recently did a restructuring for creditors that were in default. This one was actually a bank loan that was in default. The securities was 8 moorings and 8 houseboats. So that's a very niche security. It wasn't property backed. Moorings on the Murray River, there's actually very, very few of those things, so they're quite valuable. You're talking about $3 million worth of assets here. It's difficult to get finance against those things because they are operational. There's a massive liability of loss. We actually ended up finding the right finance partner for them that was able to release equity from those moorings and from those houseboats to pay off the loan that was in default that was related to that and some other things that they had going on. So there is always options, but our job is actually to diagnose, okay, you can do this is the cost and rate. Does this make commercial sense for you to proceed with this option? If it does, great. If not, we simply go back to the customer and say, guys, you can get the money, but it's cheaper if we just wind you up and move on, basically.
Look, I think that's a really fantastic point. The availability of financial solutions today is really broad in the marketplace. The question is it a great idea to do it? Is there a better way that you could apply your capital moving forward?
Totally.
And I guess that's part of something that we often do here at O'Brien Palmer is to advise people, do you want to spend a large amount of money attempting to restructure a business that might not even be a profitable business?
Yep.
Is it sometimes better to draw a line in the sand and let some of these things go rather than commit what's left into an unfruitful or likely to be unsuccessful attempt to rehabilitate something that might be time to let go? And that can be a really hard decision for people to make.
Yeah, it's hard to let go.
So I guess giving people all the information, like what you're talking about, the types of finance, whether it makes sense, the costs associated, the amount of work it's going to go into it, ultimately allowing them to make those informed decisions is a really important part of what we do.
Definitely.
So I think that's great that you're at least taking the approach of not selling people into finance solutions that realistically they can't afford or are not in their interests. So.
Well, I mean, the thing is this, we're bound as brokers to act in a customer's best interest. Now, we can present options, and I've had situations where I show options to people, and at the bottom of the email, I quite literally will write, I do not recommend that you proceed with any of these things. It might be best to just have a chat with an insolvency person and consider some sort of other option. And I think if you put that transparency and that energy out into the market, it comes back in many, many ways by getting good introductions to customers, etc. Because I think in lending in general, at least in this country, in my experience, there's very little transparency. There's very, very few people that actually want to do the right thing by customers, particularly when they find distressed people. So I think it's probably refreshing to the marketplace to have a firm that does it quite differently, like Front Financial, where we will actually act in your best interest, give you all the options and all the information so that you and your respective advisors can make the right decision. And that's one of the core pillars of our business, is we're trying to bring transparency into an industry that for the last 50 years has basically operated in the dark.
Yeah, I think that's a really interesting perspective. It's an industry that probably the average people don't have a great deal of trust or faith in.
Absolutely.
And people who are coming to the table are usually at a level of desperation, so therefore it's really easy for people to take advantage of them or to be taken advantage of. So I think it's a really great approach that you're taking in providing upfront and honest advice to people.
Absolutely.
So that's some really useful information about what you're doing and the types of products and services that you're providing. Tell us a little bit about yourselves. How did you get into this business? How did you start Front Financial?
Good question. So I started in some tiny little office in Walkham Hills, Western Sydney. I had no support staff, sort of lacking mentor that sort of was doing a lot of the credit assessment and applications herself still. And I sort of realised that the industry, mortgage broking in general, is not necessarily a profession that, it's not something, when I say an investment banker, you picture someone that's sharp. You don't get the same image, at least in my opinion, of a mortgage broker, right? Typically, they're pretty lackluster, working for themselves, no support staff, no credit team, no compliance team, no management team, no office a lot of the time. And I just saw a bit of a gap there where we can bring back that hard work enthusiasm, bring back the spirit of working hard and achieving goals and helping people back to an industry that's crying out for it. Especially, so Gussie has been with me since he was 18. We started out very much, if I can refer to it, as in the trenches. We had no support staff. We used to do everything ourselves from the beginning. We worked in one of the biggest franchise businesses in the country. They were great. The guy that I worked for there, I worked for a very successful broker in Double Bay who I'm eternally grateful to, and we still have a great relationship. I saw that the culture of the industry is very much, don't put on a suit and tie. I reckon we're probably the only mortgage brokers you've ever seen wearing a tie, if I could guess. There's 9 in Australia currently and 21 overseas. The overseas staff are unbelievable in helping us with all the assessment, credit, packaging, so that we can actually focus on dealing with the customers and the lenders to create solutions instead of getting bogged down in the day-to-day that mortgage brokers do. So that's been our journey.
Look, so many of the referrers and people that we work with at O'Brien Palmer will have brought people into a meeting in this office only to walk away with the advice that there are non-formal appointment solutions to their clients' financial difficulties that should be explored before seeking appointment of a liquidator or a voluntary administrator. What you were saying before is exactly that. The network of people that we're building understand that we're not going to sell people into liquidations or insolvency appointments that they don't need. So that when we do say, hey, this is a really critical issue, people aren't going to be looking at our motivations. They're going to understand that we're here for our network to provide holistic solutions to problems, part of which may well be formal insolvency appointments, but part of which may well be the exploration of non-formal appointments opportunities to solve the problems without needing to go down that pathway. So I think that it's a really valuable service that you're providing in that regard. If it can help people avoid that, and that is somewhat of a value add back to our network, that's a really great reason why I wanted you to come along today and have a chat with the network. So thank you very much for that.
Thanks for having us.
If anyone wants to get in touch as well at any point in time, you can either reach out directly to us or come through O'Brien Palmer. Our details are here. We'll pop them up on the screen. Please reach out anytime, 7 days a week.
Fantastic, guys. Thanks very much for coming along.
Thanks a lot.
Thanks, Leo.
I'm very happy with different... Sorry, I got distracted by the...
Yeah, I'm doing that. Stop. Banging the table.
Stop doing it.
Digital information there.
Here?
Yep.
Just here?
Pointing there.
Where do you want it? There?
Right here.
Yeah, cool.
Yep. I love the high octane. That's awesome. Imagine a life when you're brutal honesty.